Welcome back to Ballet Bites, where we chew over the big dance industry trends for our daily 10-minute deep dives. Today, we're looking at forecasts that paint a split picture. On one side, you've got a 6% or even 5% rise in dancer and choreographer roles. And on the other, a 27% decline for dancers, if you look at older windows.
Indeed.
Quite the roller coaster, right?
Absolutely. It's like, you're looking at two different snapshots of the dance world. One frame from the Bureau of Labor Statistics tells us things are inching up, while another, Zippia with its 27% decline, really throws you for a loop.
Right. Exactly. And it's all about context. The BLS numbers combine dancers and choreographers, and if you peek at the newest window, like 2024-2034, you see a 5% rise. On the flip side, Zippia's 27% drop is only for dancers and comes from that older, pandemic-influenced window from 2018 to 2028.
Yep, it really shows how definitions and timeframes can shift the narrative. And that's the kicker, isn't it? Which forecast should a working dancer trust? Well, the answer is, neither on its own. You've got to dig deeper into how these numbers are put together.
Definitely. Absolutely. And speaking of digging deeper, methodology really matters. For example, if you're a dancer on a W-2 contract, then the BLS data might work for you. But if you're a self-employed, gig-everywhere dancer on 1099s, then much of your work might not even show up in those stats.
Ah yes, because that wage data can totally miss the freelance hustle. Right. And that brings us to another interesting point. What exactly counts as a dancer in 2025? It's not just the performer on stage. It's that multi-hyphenate magic. Performer, teacher, choreographer, creator, all rolled into one.
Totally. Exactly. And, if you consider New York City's comprehensive dance census, mostly freelance dancers are doing a mix of gigs. Picture this: rehearsing for a pickup company in the morning, filming a TikTok by noon, subbing a class afterward, and then setting up a college duet in the evening. All of that gets lumped in, even though not all of it is captured in traditional stats.
Yeah, that really speaks to how the numbers might, underestimate the true scale of work a dancer is doing. Now, shifting gears a bit, the forecasts also force us to ask where the actual growth in jobs will emerge. And spoiler alert, it's not exactly inside ballet companies.
Right. Exactly. The real hiring pulse seems to be out on cruise ships, theme parks, and other commercial gigs. Think of it like this. While traditional ballet companies have stabilized post-pandemic, the real action is on the big waterliners and in parks, where full-scale productions are the norm.
It's like those venues are the new stages for dance opportunities. Right on. And that ties perfectly into a deeper question. With so many metrics available, headcount, hours worked, earnings, which one truly matters?
Yeah, it's a bit like comparing apples to, oranges, isn't it? Well, if you ask me, headcount is, kind of comforting. It says, hey, there are more jobs. But then again, think of two dancers, one with a full-time contract and another juggling 12 gigs plus teaching and content creation. Headcount would just count two. Yet the reality is, their workloads and earnings are worlds apart.
So the consensus here is to really focus on hours worked and earnings. Hours give you that real picture of workload, and earnings tell you if a dancer's making ends meet. Metrics, when taken alone, like headcount, can be really misleading if micro gigs that pay next to nothing inflate the numbers.
I agree, yeah. And speaking of earnings, the BLS reported a median hourly pay of around $24 for dancers and choreographers in May 2024. But again, many freelancers mix in income from teaching, choreography fees, and even digital content revenue, so that fixed number doesn't capture all the hustle.
Right, and it's a reminder that dance careers aren't one-dimensional. Which brings up a crucial point. The pandemic really broke the mold in terms of how dance work was structured. Dancers saw, some of the highest unemployment rates among arts professions back then. That just shows how fragile a single revenue stream can be.
That's so true. So how do we get better data to actually value these multi-hyphenate roles and the freelance gigs? 4 clear fixes come to mind. First, track hours, and not just the number of gigs. A 3-hour shoot versus a lengthy contract. They need to be weighted differently.
Right, because not all gigs are created equal. Then second, we need to include self-employment data. Surveys should dig into 1099 income, class teaching, and even choreography royalties. Third, for clarity, Jobs data should break down roles: performer, educator, choreographer, and so on. So we actually see where growth is happening.
Yeah, exactly. Granular data could really change how we view career stability in dance. And fourth, don't forget platform income. With short-form video and digital sponsorships now making rent, there needs to be a category for digital content earnings. That, my friend, is often the silent revenue stream that holds things together.
Indeed, digital doesn't just supplement, it sometimes sustains. Now, with these stats and ideas swirling around, the practical question arises: how does a dancer actually stay employable in such a gig-heavy market?
That's the million-dollar, or should I say the billable hour question. Building a 3-lane career is the answer. 1 lane is performing, tours, commercial bookings, crews, and theme contracts. Lane 2 is education, running open classes, residencies, summer intensives, even Zoom privates. And Lane 3, creative IP. That means choreography, reels, brand content. Basically, your creative portfolio.
Yeah, it's like having a diversified investment portfolio, but for dance careers. And it's not necessary to fill all 3 lanes every month. The idea is optionality, having multiple revenue streams, so if one falters, the others pick up the slack.
Absolutely, that safety net is so crucial in a volatile gig market. On top of that, making it measurable is key. Track your billable hours, your blended hourly rate, which is your total pre-tax income divided by those hours, and even your recurring income through retainers or sponsorships. If your blended rate falls below what you need to survive in your city,
That's
then
solid
it's time
advice,
to rethink your gigs.
And let's not skim over the business basics. A 1-page rate card with clear packages for performance, education, and creative work goes a long way. Include rush fees, travel expenses, and usage rights all in writing. This isn't just art, it's business.
Right on. And having that documentation can really give you leverage in negotiations. Lastly, always keep that audition pipeline active. Cruise lines and theme parks post opportunities year-round. Something as simple as maintaining a strong reel and consistent technique classes ensures you're market ready whenever casting calls drop.
Yeah, staying visible is half the battle. Now, coming full circle, the boom versus bust headlines. If you look carefully, the numbers shift based on the denominator. When the BLS rolls its projections to a new decade, the growth slopes adjust slightly, from 6% to 5%, because they're accounting for both dancers and choreographers. Meanwhile, older stats for dancers alone show steeper declines.
And that tells us the real takeaway is about understanding what's being measured, not just the headline figures. Very true. It's all about the right denominator. And in our view, while the field isn't collapsing, it is definitely rebalancing. Growth is coming from unexpected quarters. Ships, parks, digital spaces, branded experiences, while traditional salaried positions in ballet companies remain limited and competitive.
Yeah, that's a nuanced and very realistic perspective. So, as we wrap this up, what are some action steps for dancers trying to navigate this shifting landscape? Well, first, pick your 3-lane mix and commit to concrete outputs, like scheduling a certain number of auditions, reel updates, and workshop pitches every 90 days, right? Concrete and measurable steps.
Exactly. Then, build that rate card, keep it handy, and track your metrics monthly. Billable hours, blended rate, and recurring income. In about 90 days, you'll have a clear picture of whether you're riding a boom wave or need to course correct.
And honestly, that kind of accountability can really empower a dancer to steer their own career. And the final piece, always question what you see in the headlines. When you encounter a statistic, ask, what did they count? Who might they have missed? If the answer involves self-employed or freelance dancers, then you know you've got to dig a little deeper before drawing conclusions.
Exactly, it's like peeling back the layers of an onion. Right. And with that, it's clear. The dance world is evolving rapidly. The key is adapting to the multifaceted nature of work today. Metrics, career strategies, and your own brand all need to match the dynamic
It's a brave
scene.
new world for dance, and knowing these insights can really help one thrive. So, if you're in dance, or just a fan of the art form, remember, look past the simple headcount and tune into the hours and earnings that truly reflect your craft.
Absolutely, yeah. And with that, let's take these insights and keep dancing forward. Whether you're on stage, in a classroom, or behind a camera, the floor is yours, dancers, to innovate and adapt.
Definitely. Thanks for tuning in to today's Ballet Bites session. Stay curious, stay agile, and keep pushing boundaries in your career.
Right on, and here's to you making every performance count. Until next time, keep those reels turning and those auditions rolling in. And remember, when you see a headline, look deeper. It's your work, your life.
Exactly, yeah. Catch
in
you on the
play.
flip side.